I
You too,
learned
Tyler.
way back when that a little bit of inflation is usually a good thing for stocks. And right now, stocks are performing very well, even as inflation worries burn a little hotter.
Yeah, and we've seen that now for several months in a row, as you just pointed out. So it really depends, I think, Tyler, ultimately, too, on whether or not this notion of inflation being transitory proves to be true. And that, again, not to overuse the metaphor, but like a piglet through a python, just kind of moves through the economy like a big lump and then starts to level out and the rate of price increases slow and then start to normalize over the next year. I mean, there's so many inconsistencies in the economy. The third largest port in the world in Vietnam has just been effectively shuttered for a period of time because of the coronavirus and the Delta variant. So the economies of the world are not firing on all cylinders, and we're getting all these different types of adverse effects. So I think it's really hard to read inflation right now in a meaningful way because nothing, either domestically or globally, has really normalized yet.
Yeah, and I guess what interests me in part is things can be very, very volatile. Take lumber. It was up so much earlier this year, and everybody was saying I was going to raise the price of houses. Well, it's basically crashed. It's down, what, from 1,500 to 500, whatever the unit of measure is, or something like that. And
yeah, 1670 per thousand board feet to under 500. So we almost have a philosophical question here, Tyler. If lumber falls in the futures market, does it make a sound? And so far, it hasn't. I mean, the increase boosted the price of a new home by nearly $30,000 or more. Once they work off that expensive inventory, if those prices reverse, then you're going to have a sudden drop in the cost of a house. And that will, particularly in the CPI, show up rather dramatically.
Well, that's kind of the question I want to get to, because there are some things where the input costs can go up and down a great deal. Fuel, we know about that, and lumber, here's an example of that. Labor, when the price goes up, wages typically don't come back down.
Right.
They usually are sticky. And so my question really is, even if the price of lumber comes down, and it added $30,000 to the price of a house, are sellers of houses or builders of houses going to cut those prices back to reflect today's lower price of, say, lumber?
Well, they may or they may not. I mean, we still have a huge imbalance between supply and demand in the housing market. We're still somewhere in the neighborhood of 5 million homes short of demand. So that demand pressure is pushing up prices as well as the input costs. But the input costs have come down, and I think that's notable. And again, it's something we're not going to know for months. And, you mentioned energy. Gasoline prices are going to come down now that oil's dropped $9 or so a barrel. I mean, we'll see that. But again, you work off those higher priced inventories, and then the price of gasoline starts to normalize everywhere but in California, where it's over $5 a gallon for a wide variety of reasons that are specific only to that state. But gasoline prices are going to start to come down, particularly as we come to the end of the summer driving season. So some of those things that have been hitting people very hard in the pocketbook, I think, start to abate relatively soon. And certainly the bond market might be telling us that, given that the consumer confidence data were so weak today.
Right.